You know that feeling when you look at your savings and realize your cash is just sitting there? Well, today we're going to dive into a really powerful but conservative strategy that's all about making that idle money work a whole lot harder for you, safely and smartly. So let's be real for a second. Is your cash really pulling its weight in that savings account? I mean, with the interest rates we see these days, you're probably leaving a ton of potential income just sitting on the table. Okay, so let's talk about a different game plan. A strategy where protecting your money is absolutely priority number one, but the goal is still to bring in a pretty respectable income. Think of it like playing some really smart, profitable defense with your portfolio.
And here's the core idea right here. What if you could actually get paid for your patience? Imagine you've picked out a fantastic company, but you only want to buy it at a much lower deep value price. Well, this strategy pays you cash to just sit back and wait for that price.
All right, enough theory. Let's make this super concrete. We're going to break down a specific real-world trade on a big-name company, PLTR, so you can see exactly how this whole thing works in action. Now, the engine behind all this is called a cash-secured put. And I know it sounds a little jargony, but trust me, the idea is incredibly simple. You get paid cash right now just for promising to buy a stock you already like. But, and this is the important part, only if it drops to a price that you get to pick ahead of time.
So here are the nuts and bolts of the deal. We're looking at PLTR ticker PLTR. The deal is we're agreeing to maybe buy 100 shares at $85 a pop, but only if the price drops that low in the next 98 days. Just for making that promise, we collect $200 up front. The only thing we have to do is set aside the $8,500 needed to buy the stock, just in case.
Now, here's where it gets really interesting. At the time we're looking at this, PLTR is actually trading way up here, at over $126 a share.
But remember, we are absolutely not buying it at that price. No way. Our promise only kicks in if the stock falls all the way down to $85. And that $85 price, it's not random. That's the stock's absolute lowest point for the entire past year.
This chart just says it all, doesn't it? Look at that enormous safety buffer we've built in. For us to actually have to buy these shares, PLTR stock would need to collapse by almost 33% in just over 3 months. That is a massive cushion against risk. So where do we go from here? Well, this is the beautiful part. This trade really only has 2 possible outcomes. And honestly, they're both pretty favorable, depending on what you're trying to do. Okay, here's the bottom line. Scenario 1, the stock stays above 85 bucks. The contract just poof, expires, worthless. You keep the $200 as pure profit, and your cash is free to do something else. That's a win. Scenario 2, the stock does fall below 85. Okay, now you get to sign the shares, but you're buying them at that exact deep value price you wanted all along. It's another win. Sure, the stock could keep falling, that's a risk. But the key is you're getting the company at a price you already decided was a fantastic long-term value. Now let's just focus on that first scenario for a second. If that option expires, you've made a 2.35% return on your cash in about 3 months. If you stretch that out over a year, that comes out to an 8.7% annualized yield. I mean, good luck finding a high-yield savings account that even comes close to that.
So why do we keep calling this a fortress trade? Well, it's because it's built with multiple layers of defense that make it an incredibly sturdy position for your money.
First off, that $85 price isn't just some number we plucked out of thin air. It's a major long-term support level. This is a price where, historically, the big money investors, the whales of the market, have stepped in and bought huge amounts of stock. They're signaling that they see incredible value right at that point. Second, the math is just on our side. Based on the way the market is pricing things, there's a greater than 90% probability that PLTR stock will stay above our $85 target when the contract expires. The market itself is telling us this is a very likely win. So let's just recap the walls of our fortress. We've got a huge downside cushion. We're targeting an entry at a price the big institutions love. The statistical odds are heavily in our favor. We're earning a fantastic yield on our cash while we wait, and hey, there's even a little bonus kicker. If PLTR stock rallies higher, a lot of times you can just close the trade early for a quick profit.
Let's be crystal clear about the goal here. This is not a speculative, get-rich-quick scheme. Not at all. This is a conservative strategy. It's for somebody whose main goal is protecting their capital first and then generating a smart, steady yield on top of it.
And that leaves us with one final, really important question for you to think about for your own portfolio. When it comes to your cash, are you better off building a defensive fortress and getting paid to wait for your price?
or chasing a stock that's already flying high. It's definitely something to think about.